Happy holidays, people. Thank you for visiting my Stock Talk once again. Today is May 27th at 5:59 p.m. Eastern Time. Tomorrow is Memorial Day, so we do not expect the markets to open, but we will, of course, still have a Stock Talk. And once again, thank you very much for joining this channel. And I read all of your comments, and we're going to go through all the tickers that you guys submitted. So very, very nice. And let's get started, as always, looking at SPY on the 180-day chart. And here it is right here. This tracks the S&P 500. So zooming in on the current trend, right? We know that we've broken the bearish trend because looking at the 180-day, we know that we were making lower highs until now. And we were actually, at this point when we broke above this lower high, we were thinking, well, is this a false breakout? But we know that look how we kind of tested this area and we kind of got bounced back up. And at that point, we realized that we were going to go into a horizontal channel from the bottom to the top. Now this horizontal channel, we have a support around 270 to 271 on SPY, and we have a resistance around 274. And you guys can see how we've been pretty much hitting the bottom, going to the top, now hitting the bottom, going to the top. And if you guys can imagine this on the 1 year chart, what kind of pattern is this? What kind of pattern is this? Well, this is a bull flag pattern, right? Here we go. Here's the first leg up, followed by a small leg, that kind of comes down a little bit, and there's the flag. And now we're gonna go back up again. So remember this. The longer we consolidate in this horizontal pattern, as we have identified from 271, 270 to 274, the bigger the push higher, which is why you guys can see that I drew a line, and this occurred quite a while ago. I drew a line around 277. That's where I see the market could potentially take us. Note that if you guys just do this, right? This is around 1%. And of course, I drew it a little more than 1%. Doesn't mean it will get all the way up there, but there is potential to get up to this area. And this is a very nice, promising pattern. And you guys can see that the futures just open higher. It doesn't really mean too much to us since we're not, if you guys are not trading, we're not trading tomorrow. But on Tuesday, if this pattern does hold up, we do expect a leg up in the next week or this coming week. So be on the lookout for that. So when we were going on this horizontal pattern, one probable trade that you guys could have taken is whenever we hit 270 and 271, we take a position on those tickers that kind of follow the markets. And one of them being TQQQ, right, which tracks the NASDAQ at 3 times leverage. So let's take a look at TVIX really quickly. TVIX tracks volatility. This is kind of what we look at in terms of, this kind of follows the VIX or the volatility index, and as stock markets move up, we do expect volatility to keep dropping. So even though we're at the 180-day low, we don't want to say, hey, let's start buying low and selling high, because volatility, as you can see, can keep dropping as the markets push higher. You can imagine if SPY does manage to hit like 177 area, this support or will certainly break. And you guys can look at the light blue line, which is the 20 EMA, and that every time we got pretty much the light blue line, we got rejected here, rejected here, rejected here, kind of rejected here, and then now we're coming back down. So note that volatility is on this continual downtrend. And I wouldn't be surprised if this goes even lower to around 440, 420, $4 as the markets keep pushing up. So I hope you guys were able to take advantage of that. Now, let's take a look at some really interesting patterns that happened on SOXL, which tracks crude oil futures. I think everyone was super interested as to the magnitude of the decline on Friday. So looking at the 180-day chart, we have been talking about how crude oil has been bullish. And we expected this. Look at this line. I actually drew a resistance and I pulled it to the 10-year chart. So I want to show you guys the 10-year chart on crude oil futures. And the reason we have this resistance right here, taking a look at the 10-year chart, is because you can see that this acted as a previous support until we broke down at this area. And now that we've made a 3-year or 4-year high, you guys can hear it on the news, right? We're constantly making new highs. We're very close to the resistance area. So at this point, we need to think or start thinking, when can we start buying into inverse crude oil or drip? So this is something that should be popping into our minds. And look at this current trend. Okay, so here we're looking at weekly open and closes by each bar. And here's the 20 EMA. Know how overextended we were, right? We're still not at the resistance yet. Certainly means that we might still have another leg up to come for crude oil, but we will definitely need to see what happens when we get to the 20 EMA. And where's the 20 EMA? Well, that's when crude oil hits around 65.84. Note that we're at 67.19, and there's still some room to test that area before we might get another push up. So this right now, in my opinion, is a pretty dangerous area. We're close to the resistance. We've gone up a lot. Doesn't mean that it's going to come down below the 20 EMA and start dropping, but we do, we want to see either it continue to push back up in this week or next week, or we see some sort of downward spiral, right? If we can push under the 20 EMA and keep under the 20 EMA, at that time, drip is a massive, massive play. So be on the lookout for that. So if you guys were looking at Friday, I was in Gush, and I sold my position in Gush during morning hours, like before, kind of like when the markets just opened, I sold Gush because I knew that, yes, I took a loss, but looking at the 3-year and the 10-year charts, this is just a little more concerning than I had wanted to. You guys can see that on the 180-day chart. Look how concerning this was. Look how we broke under the blue line, or the 50 SMA. We couldn't even catch it at the 200 SMA, which is even more concerning to me, and how we came straight down. Now, this is the overall bullish pattern for SOXL or crude oil, right? Which means that we need to catch it around 66.30. Right? We need to catch it around there. And we talked about, I think the previous number I threw you guys around $65.80 or $66. This is a very critical point, because if we do drop below this point and we can't recover, look at the magnitude of decline that crude oil can come down. Look how fast it came down. Regardless of what news came out, there may be news about oil reserves or whatnot. We just want to see how the market reacts. If market has a good excuse for the crude oil to come down, then it comes down, right? So here it goes. So I'm looking for a play onto the ticker DRIP. So here is DRIP right here, and I actually took a position on DRIP pretty much on Friday as well when I sold Gush, because once again, looking at what's happening for DRIP, we've had this large decline, and look at this push up. This coincides with SOXL in terms of its, coming down, breaking the 200 SMA. This could be a very nice reversal area. So looking at where we are now, right, we could come down, at least test the 20 EMA, and then see if we can bounce up and go even higher. Note that the resistance area is around $9.30, but regardless, that is 25 to 30% higher. Doesn't mean it's going to get all the way up there. Doesn't mean it's going to get all the way up there this week, but we do expect, if SOXL to keep pushing lower, we do expect this to eventually get higher because of the magnitude of decline. Looking at DRIP, I know we were focusing a lot on crude oil because the pattern is really interesting right now, because the pattern has finally changed. And because we talked about, look at this, right? When we broke the major support on the 1-year trend for DRIP, we came down, and we came down another 16%. Here it was around another 16 to 18%, and here this was around 20. Let's take a look what percentage that was. So let's just draw a line. This was 23%, right? But take a look at this time around. We broke the support and we went down 38%. It just means that crude oil, or the bearish crude oil, should it start recovering, should recover really quickly, and we would expect it to go higher pretty quickly as well, just to make up some of the loss. Doesn't have to make up all the loss within 2 weeks, but to make up maybe 10%, it would rather do that pretty quickly. And look how fast we recovered from the bottom to the top. We went up around 10% on Friday. Let's take a look at /GC, which tracks gold futures, right? So gold futures, we looked at a support around 1285. We said that this wasn't a very definitive support. Yes, it was consolidating at this area. Yes, we did see this push up, but once again, we're at the 20 EMA line. Look how we got rejected on the 20 EMA line on the 1-year chart. We're looking for possibly another rejection down and coming down and retest this support. Is this going to be a double bottom? Well, we don't know yet. And, because this is not a very definitive support, we do expect a support around 1270. So there could still be a leg down for gold. So this is just one to be on the lookout for. So right now, I'm not looking for a JNUG or JDST entry because it's a little just too risky for me. You can imagine how, since we're right here, what happens if we take a JDST position and this was the reversal area versus what happens if this was a JNUG area and it comes back down, right? So we're not really sure. So I wouldn't take a position. At least I wouldn't. You guys can, of course. Looking at Floor/NG, which tracks natural gas futures, natural gas futures have shown this higher high, higher low pattern, and we said that natural gas does have a lot of room to make up because we broke over. Well, I'll show you guys the ticker that tracks natural gas, UGAZ or UGAZ, but we're following as we had expected. This channel, higher high, higher low, we're near the peak. So are we going to look for an entry for DGAZ? We could look for entry for DGAZ, but looking at this very bullish pattern, I almost don't want to go into DGAZ. We want to follow the trend, and I want natural gas to kind of come down and validate, you know, this support area. Should we start validating the support and another push higher, then we can take a pretty comfortable natural gas position at that point. So looking at let's take a look at UGAZ, right? The reason why this pattern is really interesting is looking at the 180-day chart. We've talked about a major resistance around 63.50 for natural gas. Look at this, right? And now that we've broken over the 63.50 line, look at the amount of room that we have to make up, right? We talked about how there's like a 20% makeup for UGAZ. So if you guys do really want to take a position, you know, maybe it can validate the 20 EMA before we start another push up. And at that point, we can take a natural gas position because it's bullish, it's on the uptrend, and we know that the resistance area is still a little more ways to go. So yeah, those are my commodity analysis. Let's take a look at your ticker analysis. And so you guys also wanted me to talk about the course a little bit. I will talk about more about the course. The course will have all the fundamentals, right? But also has intermediate strategies and, you know, some strategies that I employ. How do we identify a potential area for reversal? How do we put in stop losses? And how do we, you know, put in these limit orders? And how do we know where to set those limit orders, right? And what patterns do we look for in order to invest? And much, much more. Those are just the basic concepts that we talk about, but there's much more than that. There's a whole, you know, psychology kind of feature in there too. And 50% of the market is pretty much psychology, right? It's psychological. And 50% is, you know, the other 50% is a lot of factors, technical analysis, but also news that comes out. There's a lot of factors, but huge portion, in my opinion, is about psychology. So look for more about those videos in my course, future course, right? It's not out yet. Okay, looking at the tickers, BVN. So BVN, I'm not sure if I don't think I've talked about this ticker. And you guys can see how BVN, we've been making a higher low. And I'm looking at the 180-day chart and how predictable this pattern is. Look at this predictable pattern. It's been making higher highs, right? Just drawing this line. So one thing to note is when I'm drawing these lines, look at what happened, right? We're narrowing in this channel. At some point, we would see a break of this channel. It doesn't mean it's going to happen this month. Look, we do have a lot of whiles to go, right? So you guys can take a position near the bottom. You know, if it starts coming down, 53.50, set your stop loss a little lower. $15, sorry, $15.30, and then $15 stop loss. And should you, you know, recover, you know that you could probably expect at least a 5 to 6% gain. This is a really good call out. I like this pattern. Do we look for an entry right now? So right now, it's not a really bad entry. Note that, you know, we can still come down and retest, but if you guys got in right now, there's still potential for it to recover 5 to 6%. So this is not a very, you know, bad entry point. Look at your stop loss, right? If you set your stop loss around 3.3% or 3.4%. So you guys can wait, or you guys can take a small position and go into this one. Good call out. I like the trend. All right, MS, Morgan Stanley. So, all right, here's Morgan Stanley. And where's the support? Okay, so I hope you guys did identify the support was around 58.58 or 50.58. There you go. There's the support. And now we're pretty much in the channel, right? In the small channel, this horizontal pattern near the middle. So you guys might argue, well, Kevin, look at this near term. Isn't this a support? And I can agree that this can be like a partial support, but I would also argue, if you think this is a support, how much money can you actually realistically make? Well, 3%, 4%. So ask yourself, is that worth it in your opinion? And the answer might be no, because what if it comes down? You'd have a much, comfortable position near the support, but if you got in right now, right, you're pretty much an even loss to win ratio. That's not the ratio we want to look for, because if we're long, or if we're wrong, what can you feel? You can feel like, oh man, I lost 4%. I could have gotten in at a better position, etc., etc. So let's wait until it comes down to the support and then go in, and then we know where to sell at. Well, the sell point would probably be around, look how the 200 SMA has been acting as a resistance pretty much consistently. Yes, we broke above, but now we're coming back down. We do expect 200 SMA to act as a resistance. We're looking for the support to act as a support once again, should it come down. Okay, YELP. Okay, so there's YELP on the 180-day chart. So YELP has this kind of pattern. Yes, it's made a low, but look how we kind of, it's not that predictable right now, right? This could be the higher low, but then all of a sudden we broke under, and now we're going this way. And the markets, surprisingly or not surprisingly, ended Friday pretty much at the support. The question is, which pattern do we go by? Do we go by this pattern, or do we go by some other pattern? And I would almost argue that look how we've been making lower highs recently. Look at this. This is not a pattern that I like, because it looks like we're actually moving on the downtrend. We might cross this support line and keep going lower. So that's actually what I'm looking for YELP. I'm still looking for support around around $40, and then at $37.50. But right now, yes, we're kind of at a semi-support, but it's just not convincing enough for me to invest right now, given this current trend. Look how we've been making higher highs here, but all of a sudden we couldn't make this high anymore, and we're now coming down. So I think this is something to watch, and it's good for analysis in the future, but not something we actively invest in. Okay. KEM, and this looks like something that we've talked about in the past, and we talked about having a support around 1721. This is the comfortable support, because if we invest at this area, we know where to set our stop loss. If we started investing around this area, look how dangerous it is. Yes, you would have made 9.5%, but how did you know that this was the high? Well, you probably could have known that this was the high because this was the previous high here. But look, it kept going higher. Would you have been greedy and went up here and waited for 22.29? If you did that, then you would have never caught the sell area, and then look at this massive decline after earnings, right? So we never, we try not to take chances on earnings, because it's almost like a 50-50 shot. In my opinion. So now that we've come down on earnings, we're looking for another entry around 17.19. That's the comfortable area, because we can set our stop loss tight, and then we can, at the very least, expect a 7% increase in our account. So that's what I'm looking for KEM. And just one thing to note is, look how we've been making this descending triangle. Just want to keep an eye out for that, but we wouldn't invest right now, in my opinion. So if you said a 15.16 entry, 15.16, if you got in at 15.16, that is really good. But the question is, you would have invested several months ago in order to get to 15.16. So there you go. SOXL, and we talked about this pattern, right? SOXL is the semiconductor bullish. So we do expect, as markets push higher, we do kind of expect SOXL to kind of follow suit. And yes, we're near the high, right? We've broken over this resistance line once again. So I think this one, should the market continue to push up, this is one of the ETFs that may follow the market, and you guys can comfortably kind of take a position here. And then, as markets push up, we want to reference that to SPY as well. Where we think there's a resistance, we need to start selling and taking our profits. But right now, it's clearly on an uptrend. This is a very promising pattern. I think we talked about this pattern too, but we said that it was making this lower high at this point, right? But now I actually see something like this, right? You guys can see this bull flag pattern. Boom, boom, and we're preparing for another leg up. So this is, I think, a nice, one to think about going in, or entry position in, into this one. Even though we're pretty much above most of the, candles, there's potential for it to go even higher. So that's SOXL. Good call out. MU, you guys love this one. I heard some news about MU and how it's like becoming really strong. Let me know what's propagating or what's making this stock going up, because I'm not too sure what's happening with this one. But looking at the trend, right, it's been continuously going up. You guys can see how it's, when it goes up significantly higher. And this actually almost looks like a bull flag pattern. Let me see if we can see that a little better. Ah, do you guys see that? Look how we validated the 20 EMA. Right? We caught a little bit under the 20 EMA, boom, surge up. Caught a little bit of the 20 EMA, and now we have another surge up. So is this a good time to take a position? And I don't think this is a good time, because look how much we've overstretched over the 20 EMA. When we've overstretched over the 20 EMA, we always had to come down and retest the 20 EMA. We're overstretched over the 20 EMA. I can almost argue we should start thinking about short selling this one until the 20 EMA or near the 20 EMA, in which you can buy back in. At that time, you guys can write it out. So good call out. When's the earnings? 620, so a little less than a month. Look out for that, but good call out. Let's wait for it to come down before buying back onto this one. All right, I tackled a lot of the tickers from, I think, 2 videos ago. Let's try to do a couple more really quickly, just to kind of get back on track. Tango, can you please comment on LABD? So firstly, looking at LABD, we see this declining, right? And we kind of talked about LABU, which is the bullish biotech ETF, that even though we're at the support for LABD, we do expect LABU to continue pushing higher. We expect LABD to continue pushing lower, especially as markets do, kind of start pushing up. We expect more bullish ETFs to kind of pull higher. So in this case, we can see that it's been making lower lows. We've held the support many times, but the question is, when is this support going to break? And that we would look for an entry position in LABU. If you guys think, okay, should we take a position at the support? You could, but look at what happened to the support this time. It was like, okay, push up one day and then gradually decline back to the support. So what is really the potential for profit here? I think there's a better, there's some better ETFs to look into right now, like SOXL. All right. Craig, how are you doing? Comments on ADSK. So this is another good pattern to talk about. Look how earnings kind of pulled it down, okay? Pulled it down. But the one thing is, yes, we're at the 200 SMA. You might be like, okay, we're at the 200 SMA. We're going to catch it. It might do a double bottom, and now we can ride it back up. That's one possibility, true, but look at what happened here. When earnings came out and it missed earnings, look at this massive sell-off, and look how long we had to consolidate down here before we got another push up, right? So there's potential for it to, consolidate in this area, maybe even come down a little lower before this pushes higher. Even though I like this more predictable pattern in the short term, just because earnings did something, so, real ridiculously crazy here. Well, what happened here? Let me see. What happened here? You guys can see this massive buy and then this massive sell-off. It's almost like a little bit of manipulation going on. So that's not something I would go in right now. Okay. Eric Schaefer, hey Kevin, can you mind breaking SFIX and talk about the course? So yeah, I will try to incorporate some of my course a little by little in future videos as well. So hope you guys enjoy that. So here we go. We're looking at a support around 1942. In the more near term, we know that there's a support around 1981. So if you guys were to take a position, I wouldn't mind that too much because we're in this horizontal pattern. So I think this is a good time to take a position if you were to take one on Friday close, because you know where to set your stop loss. Just note that earnings are coming up. Let's see what happened in previous earnings. We got some horizontal. Here we had a sell-off. So you can imagine how earnings throws everything kind of out of whack, right? It came down and all of a sudden we had to buy back to a 180-day high. Here we kind of just consolidate at this area before it came back down. It's kind of unpredictable, looks like, based off of earnings. If it goes up one day, it might come down another day. So yes, we can take a position now, but by earnings, I probably wouldn't hold it through earnings. SFIX. All right, so that's all the tickers I'm covering today for this video. Like if you like this video, and if you didn't like it, I hope you like it in the future. I hope this helps you in some way finding entry or exit points. And Jeffrey, thank you very much for your comment. These videos are helping me learn entry and exit points. I appreciate your hard work and desire to educate others. And yeah, that's what I'm here for. I'm glad you guys do find some value in these videos. It makes me happy that, you know, you guys are learning from it. So I will see you guys Tuesday. I might make a video tomorrow about a content video on some strategies I'm looking at, but I will see you guys Tuesday for sure in terms of another market analysis. All right, guys, happy Trading Tuesday, and I'll see you then.